I'm back. I'm back. Did you guys think this was a game? I am back. We are about to kill this year. This year is ours. We are going to run this year. Everyone is going to understand what it means to make it. We are going to kill it. I am very, very excited. All right. In today's video, we're going to go over the entire market. We're going to talk about what I think is going to happen for the next steps. We're going to talk about the SPY, the NASDAQ, the IWM, the crude oil, dollar, bonds, the VIX, and we're going to take a look at the international markets as well. All right. If you guys enjoy my content, please make sure to like, comment, subscribe. Thank you guys for all of your love and support. Without further ado, let's get started with this. Alrighty, so just to quickly recap, I was bullish on the market. I was expecting them to rip it up, and we did. So the main reason why I thought we were going to rip it up was because the international markets were showing a lot of strength. Now, what I want to do before I do an analysis on the SPY, I want to talk about the international markets real quick and go over them. So now when you're taking a look at the German markets, you can clearly see that there's a lot of strength, right? But quick little recap. This is the German markets, right? This is the British markets, the UK 100. And this is the Chinese market. All of them are showing a lot of strength, but this is starting to get very, very overextended to the upside. And this strength now, essentially, is going to be the main reason. If that strength can continue, that will help the SPY continue upwards. But now, with things that overextended to the upside, it becomes a bit more difficult for this move to sustain itself, right? The other thing I want to take a look at is the large tech stocks. For example, Apple. So Apple bottomed out, showing a big reversal here. You can say that this just was purely a short covering bounce, right? But we need to start breaking above 132, 133 area and start bringing this back up for continued move upside. The only issue, right? One of the main issues that I see right now is, yes, we finally closed above this range. We filled the gap. Everything looks fine and dandy, right? But the initial cause that made us have this bullish move to begin with was the international markets that I thought were strong, and they were, right? And obviously they continued up. But now, will they continue up in that same fashion? That's what I'm starting to get a bit worried about. So we had a huge move in the international markets, but relative, the SPY barely moved, okay? So that is the only issue here. Do I see another huge move in the international markets so that the SPY can start moving up a bit more? That I'm not entirely sure if that's going to be possible. And that's starting to be one of the issues here when you're looking at things on a daily, right? On a daily, obviously, things do look strong. We closed above the range, but we stopped right at 38.2% fib from this high to this low. And the fib was 388.40, right? So see that we did not close above that level. If we closed above that level, then that would be an added reason to be much more bullish. But we closed right below it. So closing right below a level of resistance it's risky. It's tough to be overly bullish. All right. I almost completely forgot. Because this week is going to be very, very important in terms of news. Tuesday, we have Fed Powell speaking at 9 a.m. And then Thursday, we have CPI data. It would be hilarious if I went through this entire video without commenting on this stuff. But obviously, these 2 days are going to be very, very important. And then Friday, we have more data coming out at 10 a.m. So this week is going to be filled with a lot of news. And if the Fed, if Powell says some bullish stuff on Tuesday, the market can rally. It can do well. We can start rallying, right? But then Thursday we have CPI data. So it's a complete toss-up at the moment. It's very, very difficult to say which direction everything is going to go. I was just going to start. I was going to focus completely on the charts without even. Ooh, good thing I looked at this. Yeah, so obviously this looks very, very bullish, right? Very clearly looks bullish. It isn't an automatic reason to be bearish, just the fact that we closed below the fib, but clearly looks bullish, right? Also the fact that Apple bottomed out, Tesla bottomed out, Amazon is a bit still in a range, but it's still, looks green. Microsoft had a very so Microsoft also like opened outside of the lower level of the Bollinger Bands. Usually when this happens, it continues upwards. So if Microsoft can continue upwards and show some strength, I would be very surprised if Microsoft ends up just having a red or a flat day. And, because this is a lot of buying pressure. So if this buying pressure is going to occur in Microsoft, most likely tech should also follow suit. And if tech follows suit, then the overall market should also be bullish. So all of this, the fact that all of these large tech stocks are showing a lot of strength at the bottoms, they're creating like reversal patterns. Things look good. The fact that the SPY broke above its range, it's definitely not really a time to be short-term bearish. That's for sure, in my opinion. And that's not even including, we haven't even taken a look at the bonds, but the bonds are really strong as well. So this is, I was showing that we needed to start seeing the bonds close above major levels of resistance. And the reason why I'm showing the bonds is because we know that if the bonds are bullish, then the overall markets are bullish, and they have like some sort of a correlation to each other, right? So the fact that we closed above this 128 level or 129 level is important. And if we can start closing above this 130 level, that would be even better. And then the international markets, it would give enough time for the international markets to start profit taking, because right now everything is very parabolic and in the international markets. So if we get some sort of profit taking, some stagnation, it would give some time for and if the bonds closed above here, right, this stagnation period would not cause the market to fall lower. The fact that the bonds are showing strength, right? So this stagnation period in the international markets here could translate into continued strength at the bottoms for, with the tech stocks that we just saw. The tech stocks are bottoming out. They're showing some strength. So while the international markets stagnate a bit, the tech stocks can start bouncing off of their bottoms, especially with the strength in the bonds. So yeah, lots of hypotheticals here, but things are still looking pretty bullish. Things look pretty good for the, I would be surprised. But I mean, of course, anything can change. Tuesday, Fed Powell speaks, and Thursday we have CPI data. So that all of this stuff is just, everything, we're going to get an answer to it on Thursday. And then when you're taking a look at the NASDAQ, you can see that the NASDAQ is clearly underperforming compared to where the SPY is currently. The SPY is above the range. The NASDAQ is still not even at the range. So there's a lot more room to go in terms of tech. And that's why tech is the best performing. And especially they wanted to start the year off, I guess, putting money into the tech sector, get their books, make their books look nice to start the year. And yeah, so if tech can start catching up, then because even with the IWM is relatively stronger than the NASDAQ as well. But if tech can start catching up, there's a lot more room to the upside. And the large tech stocks will key off of this strength. And it would be very good. And for bulls in the short term. Another thing that I want to quickly take a look at is this looks like an inverted head and shoulders pattern. So inverted head and shoulders patterns are generally very bullish patterns, and the fact that this is occurring, it means that over the next potentially month or two, things can bounce back up above 400 to 410. So if that is the case, obviously it pays to be bullish here. All the tech stocks are at their bottoms. Things, look like things go up. And we got more clarity in terms of what the Feds want to do. The Feds do not want to cut rates. So because we have that clarity, the market, I guess, is taking that into consideration. And we also know that the Fed wants to have a soft landing. So they're not just going to let the market plummet below 350. Obviously, in this year, definitely bearish. All right, 100%. We're definitely bearish this year, in my opinion. Like, there should be a recession. We should have a big drawdown in the stock market. But in the short term, the Fed does not want to have a soft landing. So for that reason, they're going to allow the market to bounce up. And in my opinion, if this inverse head and shoulders pattern plays out, we can continue up, and then we'll get much better shorting opportunities, up here again, and then we can buy even more shorts for, late 2024, 2025 as a very safe long-term put play. But immediately this looks bullish. But of course, things can change Tuesday and on Thursday. So yeah, there's my analysis. I hope you guys enjoyed. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. I'll be live streaming again. Thank you.